how should an advisor introduce that into their kind of fact find? What are some of the questions they can ask that make it feel like a natural part of it?
So I think when it comes to questioning and being questions as part of the fact find, I think it's really important that we don't see them as fact questions, but we see them more as really helping the client to understand what their problems are. Because open-ended questions that get a client thinking is so much more important. I mean, our job is to make sure that they see a problem that they maybe never thought about before. And there's two ways to do this. There's one way, and you can tell your client, this is the problem. And I don't know how you feel, Rob, if somebody says to you, Rob, let me tell you what your problem is. Yeah. You know, like, not many people.
What happened?
No. But not many people react well to that. And so it's quite tricky. So we've got to get them to see a problem without actually telling them what that problem is.
Yeah.
And if we have a mortgage-only conversation, so that is life cover only, it's quite a simple conversation. There's not too much to talk about. There's not too much to think about. But when we are looking more at a holistic financial planning conversation where we're talking about income protection and serious illness cover, that's when open-ended questions and getting that client to really stop and pause and think about something that they potentially have never thought about before. And so, you know, the way that we word the questions are so important. So one of the things that we talk about is, you know, if your income has paused for a few months, so we're not saying that you're going to, you know, have no income for the rest of your life. So we're just saying, if it's paused, which bills would you need covered first so that we can prioritize what matters most? And there's two kind of things about that question. It's the first one, it's an assumptive question, which means we are asking, what bills would you need covered first? Right? It doesn't mean, do you want your bills covered if your income stopped? It's assuming that you would want your bills covered, and so talk about what that is. And the other really important part of that question is that it shows the client that you're going to tailor the solution. You don't just have a standard template, like all of my clients, this is what I give them. It's, I want to hear from you what your priorities are so that we can focus on what matters to you. And then the other way that you can, it's also regarding an income protection conversation, you can actually just flip that question and ask it by saying, which parts of your income or which of your bills would you not want covered? Yeah. And that is an opt-out kind of question, which is often harder, and we're not trying to make the questions hard for the client. What we're trying to do is get them to really consider it. So when you're asking a question in that way, that really does help the client to kind of stop and consider what those questions are. And then just lastly, when it comes to presenting the solution, I think the most important thing is plain, simple language. And I know that sounds so obvious, but you know, Jitin, when you were talking about how overwhelmed a client feels at the point of taking out that mortgage, just thinking about the number of things they have to think about, the decisions they have to make, and that kind of cognitive overload, what we normally do as human beings is we try and simplify our choices because that helps us to deal with it. And the way that we simplify a choice is if we don't understand it, we simply push it to the side. And so using language that I love to talk about when you are explaining and presenting the solution, you don't talk about what the cover is, you talk about what the cover does. And I know that's kind of like a little bit, clear, you know, sales, whatever you want to call it. But so an example would be, you're going to say, this is life cover, and what it's going to do is it's going to clear your debt if you die so that your family never have to worry about a mortgage repayment. And this is income protection, and what that's going to do is it's going to pay your monthly income to cover those most important bills so that you can focus on your recovery. And then serious illness cover, that's there to pay out a lump sum of money which can cover other expenses that you aren't currently having, like medical expenses or any real big capital expenses that you might need for your recovery. And when we do it that way, what happens is that the client then starts understanding that there are different needs, and those different needs have different solutions. And it helps to really frame the holistic plan and get a client to see that they can't just take one of them because they're all important.
Yeah.